Hello, everyone from Chicago. I'm Doug Laney. I want to thank Zaloni for inviting me to speak at this event. Really pleased to be with you today to share with you some ideas on Infonomics, the new economics of information. First, a little bit about me. I'm with a consulting firm called Monroe that specializes in business and technology consulting. We specialize in various industries and have various technology capabilities. My focus is more on the data and analytics strategy side of the equation, in particular, introducing some new ideas related to Infonomics around data diligence and data maturity modeling, data monetization, data literacy, helping clients set up analytics centers of excellence and data offices. What I'm about to share with you is based on the book that I researched and published a few years ago called Infonomics. Here's some nice things that people have said who aren't actually my family members. But first, let's start off with kind of the backstory on Infonomics. It starts with a very sad chapter in American and global history, and that is the 9/11 terror attacks. After the terror attacks, while I was an analyst with the research and advisory firm Gartner, some clients started contacting us, lamenting not only the tragic loss of life, but also the loss of their data ultimately. And not obviously not to make light of it or in any way, but companies realized that that it became a real existential event for them to have lost their data. They lost information about who their customers were, contract data. They lost didn't even know who their employees were. So naturally, what do you do when you suffer some kind of tragic event like that, where you suffer some kind of loss? Is you contact your insurance company. So these companies who lost their data contacted their insurers, and the insurers said, sorry, we don't consider data to be property. Therefore, we're not going to, we're sorry, we're not going to honor your claims for the data you lost. Now, this kind of came as a great surprise to me. I had always thought data was an asset, was property. Lo and behold, I kind of learned that property laws are not regularly applied by the courts. Some courts have issued rulings that data is or should be considered property because it can be manifested in some kind of tangible way, like printed or represented by bubbles on an optical disc. Other courts have said, well, since electrons have negligible mass, yes, that data should not be considered property. And then the accountants get involved and say, listen, if the insurance industry isn't going to recognize data as property, then we're not going to recognize it as an asset. In fact, the insurance industry updated a key standard only a month after 9/11 to expressly prohibit data from being recognized as property. And the accountants said, well, if they're not going to recognize it as a property and the courts are confused, then we can no longer recognize it as an asset. And so even if you wanted to include the value of your data on your balance sheet, now you no longer can, according to GAAP and other accounting standards. Now, the government got involved. The US government had a hearing on how to evolve a 1930s style accounting system into the 21st century. Why a 1930s style accounting system? Well, that's when the asset classes were defined by the then nascent SEC, the Securities Exchange Commission. And at the time, there was really no reason to think about data as a separate asset because data was all in a physical form. Papers, books, magazines, ledgers were all physical. And so there was no real separation or thought about thinking about the data as anything separate from the physical paper that it lived on. And so that takes us into into today, where these notions of what we consider an asset or property really kind of predate the information age. Now, again, fast forward to today, you can't go a day or a week or even an hour hardly without hearing somebody spout on about, pun intended, data being the new oil. And while it certainly recognizes that data has a place in the economy today, it's a driver of the economy, much as oil was the turn of the last century, but it entirely misses the point that data has unique attributes that oil doesn't have. Data is what economists would consider to be a non-rivalrous, non-depleting, regenerative asset. That is, it can be used multiple ways simultaneously. It doesn't get used up when we use it, and it generates more data whenever we use it. Oil doesn't do that. No other asset really does that. And so data is truly unique. And the companies that are thriving in the information age or the digital economy today are the ones that are taking full advantage of these unique economic characteristics of data. So then I asked the question, is data actually an asset? Does it even qualify as an asset? It's not recognized as an asset. And so I looked at a variety of definitions, and whether you look at a dictionary definition or an accounting definition of what constitutes an asset, there really are three main characteristics of what constitutes an asset. It's something that's owned and controlled, exchangeable for cash, and generates what accountants call probable future economic benefits, which is interesting because there are a lot of pundits who say, well, data only has value once you use it. Well, data has realized value when you use it, but that measure or that quality or qualification is entirely inconsistent with the way that other assets are valued. Other assets are valued on their potential future economic value, like a can of soup sitting on a store shelf, right? Nobody's eating it. You can't tell me it doesn't have value. It has future potential economic value that can be recorded and is on the balance sheet. And so really data clearly meets those criteria of being something that is owned and or controlled, exchangeable for cash, and generates a probable future economic benefit. It's just that, the accounting practices haven't come around to acknowledging that. So let's forget about what the accountants say for now. We think it's actually incumbent upon organizations to treat data as an asset. Case in point is how investors feel about data savvy kinds of companies. They find that data savvy companies who have data science organizations, chief data officers, or senior executive level person over data and analytics, and they have an enterprise data governance function. Those kinds of companies have a market to book value ratio that's nearly 2 times higher than the market average. And companies that are in the business of selling data or data derivatives of some kind as a primary offering have a 3x market to book value ratio. So look no further than how investors feel about companies that are serious about leveraging data in one way or another. And so this gets us to the topic of Infonomics. And when I started working with some of the businesses in the Twin Towers to help them value their data, it started to occur to me that there's other things that we do to assets. We don't just value them to value them, we value them so that we can manage them better. And then we manage them better so that we can generate value from them. And this is how it all kind of fits together. A lot of people know me as the 3 V's guy who came up with the volume, velocity, and variety of big data. Now I'm kind of the 3 M's guy. And hoping at some point in the near future, I'll be the 3 R's guy, retirement, relaxation, and I don't know, reading or something. So, so the way this all fits together is that it's kind of a vicious cycle for a lot of organizations, in that because they don't measure their data in any way, a lot of organizations don't even measure the quality of their data, their accuracy, completeness, timeliness, et cetera. That maybe they don't even have it cataloged, right? And as such, they are in a really poor position to manage it like an asset. Imagine a retailer with no inventory of what's in their warehouse, or a CFO with no chart of accounts, or an HR executive with no employee directory. Those would be dismissible offenses, yet CIOs and chief data officers seem to still get away with not having an inventory of the asset that they are the chief stewards of. So, I think a lot of this goes back to, you can't manage what you don't measure, and you can't monetize what you're not managing well. And for many companies, this tends to be a vicious cycle. The idea behind Infonomics is to turn this into more of a virtuous one, in which, by measuring our data and understanding its measurement components and its quality characteristics and its potential future economic value versus the actual value that it's generating today, we're in a better position to get the budgets and resources that we need to manage data as an asset. And then in doing so, our data is better managed, better integrated, better available to generate value, and then we can monetize it better. And by monetizing, I don't necessarily mean selling data. Monetizing an asset is about generating economic value from it in one or more ways that we'll talk about in a moment. So let's get directly to monetizing. Why do we start with monetizing? Well, let's start with the end in mind. And we could start with measuring, but let's talk about really what's our ultimate goal, is generating value from data. Now, there are a number of myths around data monetization, like data has to be sold to be monetized, or it requires the exchange of cash, or so on and so forth. And so I'm not going to go into detail on these myths. Just know that none of these are particularly true. And when it comes to monetizing data, there are a variety of ways to do so that we'll explore here. So as I mentioned, data monetization is this process of generating measurable value streams from available data assets. And I'm very careful about those words. We're talking about measurable value streams, not necessarily money, and from available data assets. One of the interesting things about data monetization is you can monetize data that's not yours. You can monetize data that's freely available. There are plenty of examples of companies that have gone out and harvested available data assets and generated extreme amounts of value with them, either internally or externally. We'll talk about that. So where do these data assets come from? Well, we want to integrate them from throughout the enterprise, right? Data is much more valuable once we integrate it with other data. We might want to integrate dark data that's been forgotten about, or maybe archived in the organization, or maybe used for just a single purpose. We might want to integrate data from open data sources. There are 10 million or more data sets published by government organizations and NGOs and other even public companies worldwide. There's billions, or even I think now 1 trillion websites with data and content that can be harvested for various purposes, for competitive intelligence, or to understand trends. Speaking of trends, of course, there's social media. We can gather customer sentiment and all sorts of trend-related data from social media. And then there's data we can get from exchanging with our partners. Our suppliers, our extended business ecosystem, and then of course there's data that we can buy or license from data brokers or other syndicated data providers, probably thousands of them in the market right now. So it's really important to be able to integrate all of this data, and that's really kind of a key component of monetizing it. How do we go about monetizing data? Well, we can do this in various ways. We can do so indirectly by improving business processes or reducing risk, or identifying opportunities for new products or new markets that we can enter, or we can improve relationships with our stakeholders internally and externally, or we can monetize data externally by bartering or trading with data, or exchanging it for cash, or we can enhance existing products or services. Think about any product or service that your business offers today. How can you enhance its value, its utility, its competitiveness by including data or analytics as part of that service offering or product to your customers? Or we can sell insights and analysis and reports rather than the raw data. This kind of helps us skirt privacy issues. And then there's this other issue that way of monetizing data that has come up more recently in light of various kind of restrictions and privacy restrictions on data. Like if I'm say a healthcare company, I can't sell you my data due to HIPAA and a variety of privacy regulations, but I can sell your stuff to my customers or my patients or my members, if I'm a healthcare insurer, for example. And this is what we call inverted data monetization. And in doing so, I can take a cut of the action, or a referral fee, or a commission, or just do it to foster improved member relationships or competitiveness. And so I don't have to actually sell. One of the misnomers is that you can't sell customer data. Well, you can monetize customer data, but you can't sell it in a lot of cases. So there's a variety of ways to monetize data. I'm not going to get into specific examples here. Just know that over the years, I've compiled a library of over 500 examples of how organizations are using data and analytics. And I'm going to talk about kind of our process for data monetization and how we use those examples. When we think about monetizing data, we can package it in a variety of ways. We can publish raw data, of course. We can provide access to raw data rather than publishing it. We can create workspaces where our customers or can come and work on the data without having to really expose it publicly. We can integrate it and enrich data. We can pre-aggregate it. We can do analysis, custom data products. And as we go down this chain, the utility of the data product becomes more specific to a particular consumer, and it becomes more costly to generate. So organizations have to kind of balance to what extent they're going to just publish raw data to anyone and everyone, or create more specific data products for a particular market. But you don't need to really make a single decision. You can package and productize and monetize data in a variety of ways. And we certainly encourage companies to do so, to think of a variety of ways to monetize their data. Don't just get fixated on one way. All right, so how do we go about this? What's the process? What you'll notice is that this process is very similar to really any other kind of new product introduction process. So the first thing we want to do is generate some ideas. Now, a lot of people already have ideas, but we take them through a real rigorous pace of generating ideas, developing hypotheses, looking at examples and how we might adapt those examples, others' ideas to your business, even looking at ideas outside your industry. And in doing so, we can maybe help you become the first one in your industry to capitalize on that idea. Then we want to assess all those ideas to determine how feasible they are. Are they ethically feasible, legally feasible? Are they scalable? Can we manage them? Are they operationally feasible? Is the data of sufficient quality? Do we have the technology to be able to create this kind of data product or data solution? And so we run through about 10 different kinds of feasibility assessments and then kind of see what floats to the top, including an economic analysis, of course. And then we move into the second phase where we'll kind of market testing the ideas, preparing and curating the data, maybe doing some prototyping, and then defining if this really is an externalized data product or even internally, how are we going to support it? How are we going to maintain it, monitor it, report on its efficacy and so forth? What are the technical requirements for rolling that out? And then the third phase is really more technical. How are we architecting, engineering, doing the data ops and DevOps to develop that solution? How are we implementing and testing the new offerings? How are we rolling them out and introducing them and supporting them? And then we also can provide at West Monroe program and project management for organizations that are rolling out data products. So that's kind of the basic approach. And as you can see, this really is a standard kind of product management, product development approach with some particular nuances to it. So as I mentioned, one of the things we'd like to do is help companies come up with new ideas and often take them from other industries. I often get asked as a consultant, what are others in our industry doing? What are our competitors doing? And my flippant response to that is, why do you want to be in second place? Why don't you want to adopt ideas from other industries and be the first one in your market to do so? So it's something certainly that we recommend. All right, now let's talk about managing data as an asset. And so we data professionals have been kind of making this up as we go for a number of years or decades, and really not doing a good job of paying homage to the way that other assets are managed. There's a lot of borrowing we could and should be doing out there. And so where do we go to find asset management approaches? Well, they're all around us, whatever industry we're in. If we're a physical management company, or for a company that deals with physical assets, like let's say we're a retailer or a manufacturer, or maybe a supply chain company, there are standards for how to manage those kinds of assets. For a financial asset company, there's all sorts of standards on how to manage financial assets. If we're in, say, an IT or a high-tech company, there's ITIL, IT service management, that we can apply to the way that we're managing data itself. If we're a services company, we can apply knowledge management or human capital kinds of approaches to the way that we manage data. And I know my good friend Valerie Logan's going to talk a little bit about data literacy coming up here, but and don't miss her, by the way. But I wanted to share that one of the things that we do from a data literacy perspective is by applying these asset management principles from the industry that you're in, we help to create a language for data folks and IT folks that parallels that of the business. It helps you speak better and communicate better with the business people. So even records management people are like way ahead of data people when it comes to actually applying well-honed asset management principles for data. Now, one of the things that I've done is take a look at all of these asset management approaches, and you can read about it in my book. But then I said, I got to boil this all down. What are kind of a key set of principles that are kind of commonplace to managing any kind of asset that are particular, and let's adapt them for data. So again, I borrowed another framework, which is GAP, the Generally Accepted Accounting Principles, the framework of assumptions, constraints, and tenets for how to account for data. And I applied them to how to think about managed data, or some principles for data strategy or data governance that really could form the basis for any organization. Now, I'm not going to go into detail on all of them. You can certainly read about them, but let's focus on some of the tenets on the right-hand side. One of them is the ownership principle. listen, I'm not a big fan of ascribing an owner to data. Stewards, yes, people who are responsible and accountable, but I think there's a lot of baggage with the concept of ownership. And when I started to look around at other kinds of asset management approaches, I quickly stumbled across the concept of a trustee in the financial world. And a trustee is somebody who's legally and ethically bound for the well-being and safekeeping of a particular, usually financial asset. And I think that is a great concept to use in data. And in fact, I also introduced the concept of a fiduciary, which now, again, the same sort of thing. And a fiduciary is somebody, again, who's legally responsible for an asset. And they have this fiduciary responsibility that's legal. And the state of New York has actually adopted this concept for any of its key data assets, and they have to have a fiduciary assigned. Another principle here is the assessment principle. We should know the quality and condition and value of data at any point in time across that supply chain, from the point when it's generated or collected to the point where we're dealing with data quality, to the point where we're integrating it, to the point where it's made available to consumers or users. We should know its condition and its value at any point in time. The replicability principle is another one, and this is really important because we need to recognize that, yes, we need to move data, we need to integrate data, there's particular value in doing so, but we need to be economically circumspect every time we move or copy data. Every time we move or copy data, we're increasing our attack surface. We're increasing the risk that data can get out of sync if we're not doing it properly. And we're introducing an expense to do that. And we're introducing a risk that if our data is out of sync and we don't have good DevOps and integration, then we're in a position where we're making decisions inconsistently throughout the business. Okay, so encourage you to check out these various principles. One of the things that we've also done at Western Monroe that's a particular value is introduce a new kind of maturity model, one that integrates both data and analytic maturity. Again, I'm not going to get into detail on this, just know that it's something that organizations can use to benchmark themselves. It includes over 200 kind of best practice indicators, includes concepts like architecture and how data is being deployed that you don't find in other kinds of maturity models. So happy to speak to anyone about that. Now, let's get to value. The third part in all this is in understanding and the measurement of value. So there's a variety of ways we can measure value. We can measure any asset's realized value, we can measure its probable value, we can measure its potential value. And when we do so with data, what we find is that there are various gaps that emerge, or a couple major gaps. And the first one is the performance gap. That's the gap between the value that you're actually generating from data and what you probably should be generating based on your current capabilities. Usually technology capabilities and the data that you have. There's some kind of performance issue that's in the way. But then there's also this vision gap. And that's the gap between what you should be delivering from data and what its full potential is if you applied it in any and all ways that would generate value. So as I mentioned, these workshops, these ideation workshops earlier, this is where we kind of help to close that vision gap. Now, there are a variety of reasons why we would want to measure anything, let alone data. We would want to improve the way that it's managed. We would want to prove that we are managing it, leveraging it better, and that it's generating value. And then we want some lagging indicators of its value to, again, prove that it's generating value. Or we might want some leading indicators to get a sense of what that asset's potential value is. And so one of the things that I've done is work with some valuation experts and accountants and economists and clients to develop a set of 6 kind of basic measures. And most of our clients tend to adapt them to their own needs, and that's fine because there's no real standard here. But over on the left, we call these the foundational measures. And these are ways to look at data's intrinsic value, kind of an aggregate of data quality characteristics, how accurate and complete and scarce data is, because if data is more scarce to the market, more unique and proprietary to our organization, it typically has greater potential value. We can also look at its business value. That's kind of an aggregate of its quality characteristics like accuracy and completeness, but also its timeliness, because data that isn't timely really isn't that relevant. And then we look at its relevance. How well does it map to business processes that we have? And that's how we can kind of get a sense of its business value. Some of our clients call this a utilization measure, where they're actually measuring how well data is being adopted and used throughout the organization. And then the third is the performance value, which is more of an empirical method where we look at how does having this data actually affect key performance indicators. And the best way to test this is through some kind of a controlled experiment. And then over on the right, really all we've done is borrow from the way that valuation experts value any kind of asset, using the cost approach, the market approach, and the income approach. But what we've had to do is kind of adapt some of these models for some of the nuances of data. Like, remember, data is non-rivalrous and non-depleting. So we can sell it or license it over and over again, and we can use it multiple ways simultaneously. So this is how we kind of tweak these models a little bit. And then the economic value model there at the bottom is one in which we're kind of netting out the cost to acquire, to administer, and to apply the data versus its contribution to a value stream like revenue or expense savings, and we kind of get a net value from it. But what gets really interesting is where clients are not just doing this as a one-time exercise, but as a periodic exercise, the same way that you would test any asset for impairment or improvement in value from period to period. So this might be an exercise that you want to go through every, say, quarter or 6 months, or at least annually. But again, where things get really interesting is where our clients have started to juxtapose some of these models. And I'm not going to go into details on that, but one example would be a client that identified data that had a high business relevancy, a high BVI here, but a low EVI, meaning it had high relevancy across the business in various aspects, but wasn't generating a lot of economic value. And so what they determined was that they better start using this data better. And once they did, they identified 20 new ways to leverage data throughout the organization. They ended up adding hundreds of millions of dollars of market value on a $2 billion business. Another example was a utility client that realized that data was not driving a lot of economic value, but its cost was at a certain amount. Its cost to generate and store and secure and manage the data was greater than the economic value it was generating. And so they made what's called a defensible deletion, or actually defensible disposal decision to aggregate and archive that data, again, requiring more data ops, of course, to do that, but are now saving millions of dollars in infrastructure by having kind of offloaded that data onto slower, cheaper mediums and aggregated it. So those are some ideas on how to measure data's value. Again, I'm happy to speak to anyone in more detail on that. And then finally, I want to share just some ideas on the economics of information. I teach a class on Infonomics at the University of Illinois Business School, Geese Business School. And one of my favorite assignments is asking my students to apply an economic model to data. And why this is interesting is because almost all economic models were developed with traditional goods and services in mind. If you remember your econ, we're often talking about guns and butter, right? And concepts like supply and demand and productivity frontiers and so on and so forth here, I've never really been applied to data. And so I asked the students to do that, and have just a world of really cool ideas and recommendations for organizations on how to think and act as an actual economist when it comes to data, and what data architects and business leaders should be doing with respect to determining the pricing and elasticity of data, or how the marginal utility of data is different, because most of the time we're producing data for consumption by applications and machines, not people. So there are really a lot of interesting ideas that have come out of this, and I certainly encourage you to read the book and learn a little bit more about this. And I hope to publish a number of papers from my students in the near term. But just to summarize some overall recommendations, and then we'll take some Q&A, is to, one, monetize not just your data, but what other data is available to you, typically integrate it in some fashion, and monetize it in a variety of ways. Don't just get stuck on one way to generate value from data. You definitely want to amortize it better by monetizing it in a variety of ways. This starts with being able to manage it better, to integrate your data better, to integrate a variety of data sources better, to do things like data cataloging, handle master data, metadata, data quality. All of that is really important. And really managing data with the same kind of discipline with which you manage your other assets. And then a lot of this starts with really measuring data as an asset, understanding its value characteristics, and understanding its potential value, its actual value, and the gaps therein. And a lot, I think, really, most organizations and business leaders really need to kind of think more deeply about the economics of information and how to take advantage of information's unique economic characteristics that I talked about before, and how to apply economic models to data in ways that drive certain kinds of advantages for them. There's really, again, great examples in the book of organizations doing this. And I'm happy to speak to any of you about it. Here's how to reach me at West Monroe. You can certainly follow me on Twitter and LinkedIn as well. I typically post under the hashtag Infonomics if you don't want to follow me directly. And we'll make copies of Infonomics available to your executive team. If you reach out to me, we can make that available. The course that I teach at University of Illinois is also available on Coursera for those of you not currently taking an MBA or who are accounting students. So there's a variety of ways to learn the topic more deeply. So again, thank you to Zaloni for inviting me to speak to you all today, and have a great rest of your day, and we'll be taking some questions. Cheers.